The S&Ps rallied this week, as we predicted, and prices are likely to go higher. Today is August 12th, and the situation has continued to be remarkably bullish. And now the odds have shifted from roughly 50-50 to whether or not there is a breakout parabolic move. I think we're now about 60-40, that it's more likely to happen than not. However, there is a caveat. We need to get a lot higher before the end of the month in order for the prices to stay above the 6,300 area, 6,400 area on a pullback that's likely in September. If it doesn't go high enough, it'll pull back into the range and could still come back down again. But the odds are now in favor of continued higher prices all the way until the end of October, early November. I want to remind you that our Market Forecast Mastery course is starting again on the 17th of August. And I want you to realize that the results of the students taking this course has been rather dramatically good. An example, one student basically said, I went from a losing trader to a winning trader. And that's not unusual for the course. So it is a powerful course, and it's something that includes knowledge of W.D. Gann, some astrological background in Vedic astrology, and a variety of techniques, some of which I've invented, some of which I learned from Dr. Jerry Bomering in the 1980s. They're all very special and very rare. Okay, now in terms of the market itself, we've already seen there are two cycles we looked at. Two cycles. One was the Saturn-Sun synodic cycle. Two cycles of that was 520 trading days. And the Mars opposition to Saturn, which was 515 trading days. Both of them have been repeating for months. And they both call for highs in August. Okay, and there's likely to be higher prices in the short term, at least until the 19th of August in this swing up. The low on the 7th, the high on the 11th, possibly a pullback into the 13th tomorrow, but a short, quick one. And then higher prices into next week, all right? There's also a possibility from the 19th to the 22nd or 25th, there may be another pullback, followed by a rally up into the September 2nd area, until Labor Day. So it's conceivable the market could do quite a bit more. We said it needed to do quite a bit of work to prove itself. It's on the way doing that. It hasn't done it yet, but the momentum looks as if it's continuing as it started in April, and it took a resurgence after what could have been a deadly dip Friday a couple weeks ago, and it's recovered completely. It made new highs today, all right? The primary driver, which has been there and continues to be there, and even was not eliminated by the sharp break a few days ago, is the 60-year cycle. We've explained this repeatedly on many videos, and it looks as if it should make a high in August based on that pattern repeating, a low in September, but a shallow dip in September, followed by an explosive rally starting in mid to late September, going into late October, early November. And that would be in line with the type of parabolic move that I know David Hunter has been predicting and others. Remember, one of our significant roadblocks was this yellow curve on the matrix channel indicator, and we needed to see it break that and stay above it. And we were above it again. We broke above it a day or two ago, but we need to stay above it. And in this case, we need to get higher so that any pullbacks will stay above it that are likely to take place later. And that's why it's at this point we're still looking for 6,700, which is the next matrix resistance level. It's up around 6,720 at this point. Okay. Now we could go higher than that. That would be wonderful. But if we don't get significantly higher than we are in the 6,400 area, then we haven't really proven the breakout is in place. To show the significance of these matrix lines, this is a cash S&P chart that goes back to the year 2020. And you'll notice there are two lines, the yellow and blue lines, that have been completely dominating the swings. The low in 2020, the high in 2022, the low in 2022, and our present high area, they're all dominated and controlled by these yellow and blue lines, which are very close to each other. Now, we did break above the blue line, which is a little bit further away than it was back in the 2020 area, but we need to break above the yellow line and keep going in order to prove something. But these have been the primary controllers of the high and lows for 5 or 6 years, and actually longer than that. So this market is something to behold. It's unusual. The pullbacks are short and sweet and shallow and likely to continue to be so. But again, if we don't get up high enough, we've got to get significantly higher because there's a high probability of a pullback in September. And unless we do, we just shoot back into the range again. It takes longer, and we won't have the highs by the end of October, early November. If that does happen, unfortunately, it would just take a longer time, and probably will make highs next year around February or March. All right, but much higher prices. We're looking for 7,600, and we're not anywhere near that. So it's quite a bit of an opportunity if it does break out.